Hey everybody, Tim Knight. Well, time to review what happened on Thursday, which for some was fantastic and for others was horrible. Obviously, the Bulls had a grand old time. I read over on Zero Hedge that it was one of the really the best, most bullish days in market history. And it was quite a sight. But I wanted to review the futures markets and just share my own thoughts about it. And we will. I'm just gonna. I haven't, as normal. This is not scripted. Haven't even listed out the symbols I'm gonna look at yet. I just want to talk this through. And as is so often the case, this is as much for me as it is for you. Because this was a big day. Obviously, plus almost 1,300 points on the Dow today alone, and gains of almost 8% over on the NQ futures. Just giant day. Here's the beginning. This is the ES on a 4-hour bar chart, and this line is obviously what sticks out to me because this is a line that I drawn weeks ago. Which was anchored to the famous October 13 bottom and this bottom, and it provided support. It was support and support and support, but then this big day happened, which was last week, I believe. This was the big FOMC reversal, and it broke that line. And then today, just today, we went roaring up, and wouldn't you know it, we haven't tagged it, but we're getting quite close to the underbelly of that line. Whether that sticks or not remains to be seen. I just wanted to point that out because it's interesting to me. I mean, if we look at a very long term, like a weekly chart, you can see that there's no particular reason to say, well, that bear market's over, because we still have our lower highs in place. And that's, to me, kind of the definition of a bear market. And even at this distance, you can see that line. It's not quite as interesting at this granularity, but there we have it. But you can see how huge a bar this was. Let's switch to a daily. And it's just, it is a monster of a bar. This, incidentally, is the lifetime. Actually, and forgive me, I don't know if this is a bug in Thinkorswim, but I just noticed this is anchored wrong. Let's fix that, because we don't want bad Fibonacci anchors, do we? So now that's the top, and that looks like it's at the bottom just about. Yeah. But just want to make sure I got that right. Yeah, there's the weekly. So yeah, that's the bottom. So there must be a little bug there in Thinkorswim, so that's fine. But interestingly, you can see that it's just incredible. And again, shame on me for not dumping everything on the 13th of October. But we tagged that Fibonacci level beautifully. Now, we had been banging around this level for a long time, and we seem to have reached escape velocity today. But as I say, Friday, tomorrow, depending on when you're listening to this, it'll be kind of important, I think, to see how much follow through there is. Now, I am not expecting this huge surge to disappear anytime soon. Even if we fell hard tomorrow, which I don't think is going to happen, all that's going to happen is that we would just kind of work our way back toward this very strong retracement level here. But I'm absolutely not thinking that's going to take place. The euphoria from this is going to last for a while. Let's look at some other items here. Here's the RTY, that is the small caps. And this horizontal line has been kind of a good guide. As you can see, it was resistance for a while, then it was pretty good support, and then went pushing through it strong today. And the next important level, I would say, is right along there. Now, what does that constitute? You know, I got all these lines. Sometimes I forget what they're for. Not real sure, to tell you the truth. But if we look in the 4-hour chart, which I kind of prefer these days, you can see that we have been more or less sine waving around this area literally since April. A little bit of an outlier here during that big counter trend rally, but on the whole, we've been very range bound, which is why I did that post this morning about how essentially the fun, easy bear market stopped on June 16. And since then, it's been a nightmare from time to time, like today, for example. Now, the NQ, in spite of the fact this was the biggest gainer day percentage-wise, it actually has been the weakest market for the year. And again, let's go to a daily here. So you can see the downtrend we've been in. Today, monster lift right there. And I think the next important test on this one, and I compared to slope charts, I really don't like these drawn objects, but they'll do. That's kind of the next test right there, that horizontal line, because we've been banging beneath that ever since September 21. So we, failed here, and we're having another go of it right there, like so. So if it blasts through that, that really opens up the prospect of more traversing going on along in this range. I guess I'll just wrap up with maybe the VIX, something like that. Let's take a longer view at this one. Yeah, I mean, you can still see if we are still in the bear market, and if the best of the bear market is still to come next year, you can still see the VIX basing like so. It doesn't seem to get past the mid 30s at any given time. It seems like anytime we get, anywhere between 30 and 35, that's just about all it can muster. But if next year we get a real rock'em sock'em robot bear market plunge that lasts for more than a day or two, then I could picture us pushing past this level and having a really meaningful explosion on the VIX there. But you know what? That's about all I've got to say, because I came into this day knowing that it would be either a really good day or a really bad day, and the badness was mitigated, as I've written about earlier today, but it still stunk out loud. It was a rotten day, as the title of the post says. And I am going to either just sit tight and do nothing on Friday, or if it looks like there's some give back to this rally, maybe I'll enter in a little more positions there. But I would love my bear market back. Things were so cool through June 16, but it's been just a mess and a half since then. But this is what we're given, so this is what we're working with right now. So I will say farewell, and hope you guys are all intact, more or less, and we'll see how Friday plays out. Thanks for your attention. Bye-bye.